Hello everyone and welcome to my morning report analysis videos on Thursday the 11th of January with me, Rich Pay Market Analyst at Hantec Markets. We've got an interesting move with the dollar just regaining some of its losses that it saw yesterday. We saw the dollar under significant pressure yesterday on the back of news that China were sort of contemplating pulling back from its treasury purchases. Now the suggestion has been scotched today by again Chinese sources, but the mere threat of it certainly had a big impact, sending treasury yields sharply higher yesterday. Now that move has unwound to a certain extent today, but we still see that there was a significant impact on the dollar weakening significantly yesterday, just rebounding, as I said, today as markets have sort of unwound some of this move, but the legacy of that could continue, and it certainly looks as though the on a technical basis this resistance around sort of 92.50 to 92.75 on the trade weighted dollar remains intact. You could sort of also look at charts such as this, whereby you see the bund yield spread underneath treasuries, and that continues to drop away, and that should put downward pressure on euro. So to be honest, there is a little bit of sort of as you were on that euro dollar chart, but as the move has unwound, but it certainly looks as though the dollar is under still under medium-term pressure now to the downside, following on from that breakdown back in earlier this month, or late December, should say. So what we have seen is today a little bit of an unwinding move. Euro dollar mildly sort of lower, bit of consolidation, but sterling lower. Dollar yen higher. Dollar yen made the big break of a move below 112 big figure. I'll talk about that in my chart. Made that break yesterday. But it's also interesting that we've seen a deterioration in the market sentiment generally on the back of this, as safe haven plays had a big strong move to the upside. A little bit of an unwinding move, sorry, today, or late into the close yesterday, and sort of consolidated a bit today on gold. But equities sort of remain a little bit sort of cautious on the back of that. We saw the S&P 500 sort of coming down very slightly, although rallied into the close. Still, that rally into close hasn't really sort of been played out on the European markets yet today, and Asian markets were also fairly cautious overnight. So where does that leave us today? Well, we've got a whole load of data. The US PPI at 130 and weekly jobless claims. So that's pretty much sort of the limit of it. Just one thing here, we had Aussie retail sales better than expected. That's leading to a bit of outperformance on the Aussie today. But generally speaking, we're sort of zooming down here. We've got the jobless claims 245 down from 250. That's basically sort of where it has been, 230 to 250 recent weeks. And then the PPI expected to mildly tick lower on the headline, expected to mildly tick higher on the core. Basically pretty much stabilising on inflation. No real major signs of picking up on inflation yet. So that's the data that we've got to look forward to today. My chance today is the DAX. Now the DAX, as I said, came under pressure to the downside yesterday. I mean, I've been talking about the DAX on, I do DAX futures on the website. And I've been talking about the fact that the DAX had been sort of consolidating above this breakout from the December high. Now it closed sharply below that December high. On the cash, it's 1339. Sorry, 13339. So big sharp move to the downside, confirmed with a closing break. You've got the momentum indicators rolling over, the stochastics, a crossover sell signal, not yet confirmed I might add, but still a crossover sell signal, and the RSI again falling back under 60. And it looks as though the market has rolled over, and again down today, and that's despite the fact that Wall Street rallied into the close last night. And you can see here on the hourly chart whereby the market is back under 13,340 area, failing at 13,300 today, rolling over. You've got the momentum indicators, which do look still a little bit tentative, although sort of fairly indecisive, I suppose you could argue, but still having sort of failed at 13,300 and moving down in the latter stage, early this morning, you could suggest that that's going to put pressure back on yesterday's low, 13,228. And if that breaks the downside, you're looking at 13,200. But it certainly looks as though, I mean, on a general basis throughout the recent months, you see the market sort of trending for a week or so, and then retracing the trend, and you get a lot of mixed signals, a lot of false signals as the DAX sort of trades through this sort of choppy range, and having that strong one higher gives you an opportunity, I think, to take some profits, take some money off. Onto the short side perhaps, and it certainly looks as though that the pressure is growing back to the downside. So 13,200 is a possibility. That's old support of sort of breakout highs, a bit of a pivot you could argue, but 13,000 generally I think is a basis of a sort of a mid-range pivot, you could argue, and I think a retreat back towards there could even be seen. So if you get another closing with a to the downside on a bear candle, then that could certainly add to the downside pressure. 13,228 being that initial support today. A failure on any sort of rebound, a failure sort of around that 13,340 area would, I think, be a sort of a bit of a selling opportunity. So wish you good luck in your trading today, and I will speak to you later.